Good morning, friends, and welcome from sharetrading.school.com. Today, 16th March 2017. I'll just quickly take you through the current scenario in Nifty and we'll see the trading strategies in Nifty. At this moment, if you look at Nifty, we have talked about this. There is a gap 9060, which is acting as a support, and uh, for future benefit, this gap need to be filled. But yesterday we have seen that market remained flat, and in my observation, this trend line which I have plotted here, you can see that I have joined 6th Feb high and then joined 23rd Feb high, and you can see that this red trend line is acting as a resistance. So at this moment, this upper trend line is acting as a resistance, and there is a lower trend line which I have plotted from 23rd Jan, and this low which I have taken of 10th March and joined this trend line. So these two trend lines are showing us a formation of wedge, and that is a rising wedge, and this rising wedge is basically a negative formation. If you look at rising wedge kind of formations, then you will have to wait for this to break south, and once it breaches south, then there will be a target of actually the width of wedge in the opening that can be considered as a future target. So if in case this happens, then we will have to wait for this wedge to breach at the lower level. However, everything is looking like very strong. International sentiments are in favor of bulls. So probably today market will open with the gap. In my view, I'll keep observing this upper trend line, whether market closes above this trend line. And once it closes above this trend line consecutively for 2 days, then I'll say that this trend line become invalid, and then with these rising wedge formations will not be effective in future. But at this moment, we will have to follow this wedge, and because of this wedge, I am taking a little caution here. And to support this, I have the RSI plotted south down here, and if I convert it into 4 hourly chart, at this moment I see that there is a diversion, in impending diversion. This impending diversion is basically again a negative sentiment. So in my view, this everything is showing is that overbought market, diversion in 4 hourly chart, and rising wedge, these three patterns are actually showing us that bulls are becoming weak, and chances are there that negatives, if single negative sentiment arises here, will lead to the fall. So while trading, take a caution at this moment. Change your chart to 2 hourly, though everything is bullish, so we will have to take advantage of bullish market. In my view, I'll be keeping a stop loss to this lower trend line. I have been talking about 50 EMA yesterday as a stop loss. So in my view, this 50 EMA will change once the market opens with the gap. It may actually trail to somewhere in this gap. So my perception at this moment is that importance will be given to this trend line. So plot this trend line and keep your stop loss. And once this trend line reaches out, then we will have to exit our all long positions. And till then, we will continue our long. And while trading this, remember, slowly things are changing, and probably few symptoms has started coming in that we will need to take a profit booking. We may see a fall. As I said, we may see a fall. Sometime overbought market can become extremely overbought, and these kind of negative sentiments or negative notion sometimes fails, and patterns can become invalid patterns. So while in this process, once we get this pattern, we cannot ignore, but we will have to use this pattern once that it become effective. And at this moment, wage is not become effective. We will have to wait for this wage to become effective. Till then, we'll take advantage of this bullish market. So thank you very much, friend. Keep your stop loss to this line and keep trading. So wish you best of luck. Do subscribe our channel, and thank you very much. Good day.